Coming up on Market to Market, congressional actions remain muted, leaving the Farm Bill stuck in neutral. How solar is adding to the bottom line on the farm, and we will have the commodity market analysis of Shawn Hackett next.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next, because a pioneer, our name is our mission.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
This is the Friday, October 20th edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. The U.S. economy is driven by nearly 70% consumption. So when retailers have gains, the economy grows. Last month, retail sales were up 0.7%, according to the Commerce Department. This was the 6th consecutive month of gains in this report. There were fewer sales of existing homes for a 4th consecutive month in September. Surging interest rates and low inventory contributed to a 2% decline. The Rural Main Street Index dropped to its lowest level in 2023 with a reading of 44.4. The Creighton University-based survey revealed a slower gain in farmland prices as well as equipment sales. The vote to find a new Speaker of the House has delayed much of the legislative process in Washington, D.C., while also creating uncertainty for key bills close to the finish line. Peter Tubbs reports.
No person having received a majority of the whole number of votes cast by surname, a speaker has not been elected.
Republican gridlock in the House has dimmed the prospect of the 2023 Farm Bill being finished in this calendar year.
The House will come to order.
The work of the 118th Congress has largely ground to a halt, while the Republican majority wrestles with the question of who should be Speaker of the House. Among Congress's unfinished work is writing the 2023 Farm Bill. The 2018 legislation expired in September as Congress was focused on passing a 45-day continuation of the federal budget, but the government continues to administer agriculture programs under the terms of the 2018 Farm Bill. Failure to complete the 2023 Farm Bill or extend the 2018 legislation by December 31st would revert some programs to language written in the 1930s and 1940s. One member of the Senate Agriculture Committee expects an extension of the 2018 Farm Bill to buy Congress time to finish its overdue work on 12 large omnibus spending bills.
And that's a major obstacle to getting a bill moving in the United States Senate. So I see by now, through the last half of October, until Christmas Eve, that we're not going to have time, even if the House picks a speaker yesterday, that the House moves a bill, that we're going to be able to get anything done in the Senate. So I see a one-year extension of the 2018 Farm Bill. I'm drawing conclusions as an individual senator, but you can see with 12 appropriation bills that have to be passed between now and Christmas to fund the government. I hope I'm wrong, because the farmers are entitled to more certainty.
The most recent House Farm Bill listening session was held on August 2nd. The last time the full Agriculture Committee held a hearing on the Farm Bill was June 14th. On a related note, without congressional action, the federal government will also shut down on November 17th. For Market to Market, I'm Peter Tubbs.
Plans for a multi-state CO2 pipeline project were scrapped Friday. Navigator CO2 Ventures announced they are canceling a bid to transport carbon dioxide from ethanol plants to underground sequestration locations. The Heartland Greenway project was hampered last month when South Dakota regulators denied the permit application. Points over land use, sustainability, and who exactly benefits from these energy plans are frequent. And the model could be used for renewable energy projects elsewhere. This week, energy officials in Minnesota met at the state's Solar Energy Industries Association conference. Concerns were raised about the state's goal to be carbon-free by 2040. One success in Minnesota's quest to lower its carbon emissions involves adding solar capacity. Peter Tubbs reports in our cover story.
A load of steel arrives on a November morning near Bird Island, Minnesota. The 7-acre site on the edge of town will host a 1.4 megawatt solar garden, enough energy generation capacity to power roughly 200 Minnesota homes. It is one of dozens of solar projects in Minnesota that fall under the category of community solar, where solar energy is sold directly to consumers rather than adding electricity to the general grid.
I think there are a lot of people who would really like to participate in solar, but for whatever reason, they don't have the right roof, they don't have the right money right now, they're not in an area where it seems tenable, but they really want to participate. They're watching clean energy happen around them, and they want to know, this is for me too.
Minnesota has more solar capacity in the community solar category than the entire country combined, the result of legislation signed in 2013.
I think the fact that there is not a cap on how much community solar can be developed is a big part of that magic formula. But because there's not been a cap, it has really allowed that private sector development to continue as long as there are households who want it and area available to do the development. It has grown just leaps and bounds in a continuous way.
Statewide, there are over 400 community solar sites generating over 825 megawatts of electricity. While 28,000 community solar subscribers purchase the solar energy, only 14% of the energy is used by residential customers. Called community solar gardens, the legislation encourages the use of a commercial or government purchaser as an anchor subscriber. This helps those planning solar gardens to acquire financing for the project and provides a pathway for the purchase of energy left over as residential subscribers come in and out of the program. The Minnesota Code for Community Solar also requires the energy generated by a garden to be used by a subscriber in the county of generation or an adjacent county. The rule has resulted in a surplus of landowners in some areas interested in leasing acres that lack enough potential customers in the immediate area to justify a project.
Electrical wires don't stop at a county border. There's a disconnect because there's wait lists of people that want to subscribe to these projects.
You're
and
right.
there are wait lists of people that want to host it on their property. And there's just this artificial barrier in between that says that you two don't line up.
When community solar developers propose a solar project to a landowner, they focus on the consistency of the project.
It is similar to the residential subscriber message. It's take control of the value that you can generate from your property. You know, if we're approaching a farmer landowner, we are likely proposing to only occupy a portion of their property, and we can offer typically higher rates than can be earned through traditional agriculture, but we're not prohibiting the continued use of agriculture.
Landowners interested in hosting a community solar garden are drawn to benefits that are both financial and structural. Many solar gardens are placed on sites that are often difficult to farm or are of marginal quality for row crops. Leases can result in income that is a multiple of potential crop income in a given year, and that rate is guaranteed for up to 25 years. Solar's impact on Minnesota agriculture has been limited. Less than 20,000 acres of solar projects have been completed in the state, a small footprint compared to the 1 million acres of Minnesota farm ground that are in CRP, and a sliver of the 25 million acres devoted to agricultural production in the state.
Solar panels are pretty good neighbors, and once you visit solar sites or even have one in your community, you tend to start to realize that they're quiet once they're installed.
Many solar projects use cover crops rather than hard surfacing, which can improve soil quality. This can both limit erosion and filter runoff, which can improve the water quality of nearby lakes and streams. Many of these areas benefit from being grazed, which can provide another revenue stream for the landowner. The solar industry is also experimenting with growing row crops and vegetables beneath solar panels, finding both yield increases for the crops and performance improvements in the panels. Community Energy Futures of Minneapolis has spent the last decade building community solar gardens as a co-op, focusing on residential customers for the majority of their electricity volume. Working in urban environments, they have sited solar gardens on the roofs of structures like churches, government buildings, and a parking ramp in downtown Minneapolis. A government or nonprofit acts as the primary buyer of the electricity, while the majority of the electricity is sold to residential customers. Xcel Energy, which services 3.7 million electrical customers in 8 states and is the primary electrical provider in the southern half of Minnesota, issues a credit to residential customers who purchase electricity from community solar gardens. Community Energy Futures has been seeking out households with lower incomes to join the co-op and help them earn discounts on their electric bills.
Luckily, being in this state, there are people like I mentioned that just get co-ops right away. I don't have to put panels on my house. I don't have to pay anything up front. I might be a renter. My house might be shaded. Maybe I need a roof replacement and I can't afford it right now.
Solar garden developers say most subscribers will see electrical rates drop when they sign up with a CSG, and once the installation costs are covered, consumers will enjoy static electrical rates for up to 25 years.
All these reasons build up that momentum, and what I'm finding a lot of time is like the CSG momentum in general for community solar gardens is growing big time. We just need to do more catching up on like, hey, CSGs are great, but look at this model of CSG. Look at the co-op model versus the model you're getting.
With another 400 megawatts of community solar projects in the planning stages, developers in Minnesota look to continue that momentum. For Market to Market, I'm Peter Tubbs.
Next, the Market to Market report.
Harvest is more than halfway complete, and the market appeared to bounce off seasonal lows. For the week, the nearby wheat contract added 6 cents, while the December corn contract rallied 2 cents. Good crush news boosted the soybean complex as the November contract gained 22 cents and December meal improved by 33.90. December cotton shrank by 3.66 per hundredweight. Over in the dairy parlor, November Class 3 milk futures increased 67 cents. The livestock market was lower. December cattle lost $2.12. November feeders cut $9.35. And the December lean hog contract sold off $3.50. In the currency markets, the U.S. dollar index gave up 45 ticks. November crude oil gained $1.49 per barrel. COMEX gold expanded 50 per ounce. And the Goldman Sachs Commodity Index added more than 5 points to settle at 650. Joining us now, regular market analyst Shawn Hackett. Shawn, good to see you again, sir.
Good to see you too, Paul.
You have some positive news in some fronts, but I think the overriding question is this positivity short-term, or are we in a long-term trend in commodities right now?
Our belief is that the commodity complex has made a turn, a slow turn up, meaning that we've gone from 18 months of going down to starting to work up 2 steps forward, 1 step back. So we think it's a long-term turn, but it's not going to feel good in the beginning, like we saw with grains, where you have a big breakout and then a retrenchment. That you're going to see some of that action in the beginning, but we do believe a lot of the cycles and factors are pushing more inflation in commodities and for 2024.
Inflation in commodities, maybe not inflation in general?
Correct. We are always talking about commodity inflation, which is different than headline inflation.
Sure.
That's correct.
Wheat, though, that's been fighting a couple of numbers. First, it was just stay above 5, and then all of a sudden, 6 looks like it's a possibility. Do you see 6 as a return in the near future?
I believe the days of staying under 6 on SRW wheat, for example,
Sure.
We're on borrowed time for that. We look at South American production, we look at Argentina and Australia combined. I'm thinking 40 million metric tons of production. They could be up as 60 if they had a good crop. So we're talking about a significant decline in Southern Hemisphere production, which is going to start to impact supply and demand going forward.
Australia has some rain. Global numbers are going up. So when you say short-lived, how short is this window?
I think the window is actually longer term because the short South American crops, they're ready to harvest. That's done. And when we look at dry weather in Russia, Ukraine, one of the driest planting seasons we've seen in at least 5 years, we're going into dormancy in some pretty nasty conditions in Russia, Ukraine. And of course, that's what's really been keeping this market back.
Yeah, what do you see about the Black Sea region as still being a headline driver? Because I think the last time you were here, we talked about fatigue in that. Is that still a factor?
I think we're at fatigue. I think we're now moving on to just looking at weather and supply and demand and the things that we typically look at. I don't know if this Middle East conflict with Israel is going to, instigate or that situation further because there's a lot of moving pieces. But overall, we think we're moving on to more of a fundamental story and less of a geopolitical story.
Corn market this week. You positive on it long term?
I am.
Why?
Well, when I look at weather for South America, specifically Brazil, all our weather work says that we're moving into what's called an El Nino Mordecai, which is a central sea surface temperature Pacific warm-based winter El Nino. When we get that, it means the northern half of Brazil, especially Mato Grosso, can get very hot and dry. Right now, the Amazon is having a failed monsoon season, so when I look at that, crop production in Brazil could be way, way off at a time that our production was a huge disappointment from what we thought it was going to be, meaning many in the market thought it was going to be at the beginning of the season.
You're saying disappointment domestically in our corn?
Meaning the production was lower.
Yeah.
Most people thought we were going to have this big crop. As you know, we were against that. We said we were going to have more of a drought cycle, below trend line yields. That's exactly what took place. And so despite what everyone says is a 2.2 billion bushel carryout, well, that's assuming if you believe the USDA demand. We don't. We think demand's going to surprise to the upside.
You do?
Yes.
And where's that coming from?
It's going to come from better demand from China. It's going to come from better demand from ethanol, from making renewable diesel out of ethanol. There's a lot of factors we think. It's kind of interesting. When corn is $6 and $7, everyone thinks demand's going to stay strong, and it doesn't. And when we're under 5, everyone thinks the demand's going to stay terrible, but ultimately low prices always bring in more demand. We find other ways. We make those cattle heavier. We make the pork heavier. We add those weights and improve the feeding demand.
Well, and I thought China was coming into corn, but no, I wrote that down in wheat. So China's buying for grain right now.
Well, they have been buying our SRW wheat for the first time in a long, long time. They've been buying our soybeans. Obviously for corn, they've been preferring to buy Brazilian corn because it's available, and they prefer to buy it from them when they can get their hands on it. But the demand from China has actually been pretty darn good. It's just that a lot of it has been down in Brazil, but we're starting to see that shift a little bit.
Good crush in soybeans. Is that the big driver?
Well, certainly the crush is going to be strong. We know the renewable diesel is there. The plants are opening up. That's going to continue. And if you look at the bean meal explosion in prices here in the last 2 weeks, something we warned about to our customers could happen, is suggesting that the meal demand side of the equation, a lot of people on the end user side are not covered.
Do you cover right now before it goes any higher?
Well, we already made a recommendation a few weeks back to aggressively do that when we were at 370, 375. I'm not sure I would chase the market at this moment, but I would look for any breaks in meal into the end of the year to gain physical coverage on the end user side.
Well, we have a question as we take a look at the harvest. It kind of ties into that question, and it came from Matt in Iowa. He had a question for you, Shawn, via our Facebook page. Should we reward the rally in soybeans and sell out of the field, or do we hold for higher prices?
The issue I have right now is that we have high interest rates, we have a high carry in the soybean market. If you're looking at storage costs, how much it's going to cost you to hold that, hold the soybeans into, let's say, March or May, I'm not sure soybeans at a price that works is something I would hold off on if I need to raise some cash. I think selling the cash and then using some re-ownership strategies at a much cheaper cost, to me, makes a lot of sense. Remember, you can take that money and get rid of some high cost debt as well. I mean, there's a lot of reasons I'm thinking selling out of the field in soybeans is probably a better way to go and look for opportunities to re-own. If we're correct about this Brazilian weather problem, we should see some better marketing opportunities as we go forward.
Do you anticipate carry in this market will differ much from what USDA has guided? Do you have signals that are telling you that not as much out there, Shawn?
Well, the way USDA operates, they just won't go below 180 million this 180 million bushels are not going to go lower. So whatever, even if it's zero, it's going to be 180 million bushels of carry out. So I think the number is much smaller, but they're not going to say that. And I think the corn numbers are much smaller in terms of ending stocks.
What do you think of the cotton numbers?
The cotton numbers, the problem with cotton is we've had these terrible crops all over the world, but we continue to have this gnawing worry about how higher rates, a restrictive monetary policy, and some of this weak demand that we're seeing globally on the retail front is going to mean for future cotton demand at a time, by the way, harvest lows in cotton tend to occur in November, not in October like they do for grains. It's about a month delayed. So we're at the time of the year that farmers are looking to pressure the market and get those bales out and get some cash home on the farm. So it's a tough time for maybe the next 30 days, but we think the market can dig its heels in from there and go higher after that.
In dairy, we finished the week up almost 4%, but you're telling me that's not the full story in dairy in the few days they've had. What's going on there?
Dairy is a situation where we were down in 13.5 in July, the worst losses in the history of the dairy industry. The herds are contracting, production is contracting, demand has been very, very weak up until the last two GDT auctions out of New Zealand, which are cash prices. We've seen huge surges in milk powder, huge surges in other milk derivatives, and that kind of gotten this hand-to-mouth attitude here in the U.S. excited that maybe they ought to get some extra coverage, and we've seen this market get excited again. Having said that, when we're looking at Class 3, Class 4 prices, $19 to $20 per hundredweight, we think is going to hold this market back through the end of the year. If we see that price get into that 19s like we are now, I think producers should reward that rally for now.
As we recorded this program Friday afternoon, news was released from the governor of Iowa that there had been a return of avian influenza in Buena Vista County. That's a high, and this is on a turkey farm. What does the outbreak, we anticipated this would happen again. There's been cycles in these countries that this would return. What does this do to the whole protein complex?
Well, to the extent that it causes a chicken shortage, it would mean demand for alternative proteins. It obviously means if it's really, really bad that you have some reduced demand for feed domestically until we get things going back the other way. It's unfortunate that we continue to have to deal with these animal disease problems here and elsewhere, but it just seems like it's an ongoing annual thing that we have to deal with. The market is used to it. It's not like this is a surprise anymore, like we don't know how to handle it. So the market will move forward, but it is an obstacle to moving forward hand in hand and heart to heart. So,
Cattle on Feed report came out on Friday. It was already a tough week, given a couple of things. Is it going to get tougher after this report?
Well, the estimates, we came in at 101, which was above the high end estimate on cattle on feed. We came in, I think, 106, which was above the high end on cattle placed on feed, and the marketings were 89, which was slightly below the low end. It's hard to construe that anything other than a super bearish cattle on feed report, probably the first real bearish report we've had in a very long time. Cattle has been weakening. We're very negative, the cattle price, the cattle market into the end of the year, and it could carry over into the first quarter. Those beef cutout prices are starting to fall for 2 months in a row downward, and I think sticker shock might finally take that consumer and retrench and say we're just going to pull back on that and look for something different.
Translate that into what we need to do if we're a cattle producer right now.
We have been advocate of getting these prices locked in through the spring. Don't mess around. These are good margins. The market always will surprise to the downside when you least expect it, and you don't want to have to sell cattle when it's not profitable.
Not very profitable in the hog industry either right now.
No. The pork cutout price, as of today's close, back at December 2020 price levels, that is astonishing that we have anything that's back to the 2020 price level. Very hard to get the hog industry going when no one's buying pork at that level. Obviously, the California dislocation has a lot to do with it, but the lack of Chinese demand is another issue. And even though Mexico has been a big buyer of our pork supplies has not been enough, and it's hard to see a quick remedy to that other than to say, can the cheap price finally bring the consumer back? That's the hope that we get that back for the holiday demand season.
I think I saw another analyst say the floor had a trap door in hogs. Do you think this has room to go lower?
I think short term it does.
Okay.
Until the pork cutout price improves, I think we still could have further to go. The hog market loves to overshoot anything reasonable in your mind. I'm not sure we're done yet, Paul.
All right. Thank you, Shawn.
Thank you.
Good to see you. That's Shawn Hackett. And we want you to hold, because we are going to pause this analysis, continue our discussion about these markets in our Market Plus segment. You can find both analysis, which we just finished, and plus on our website of markettomarket.org. We were producing the Market Plus and Market Analysis podcast before the concept was mainstream. Stick with us with those two, or Season 8 of the MTOM podcast. Next week, agriculture's heavy hitters gather to discuss world food policy. Thank you so much for watching. Have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next, because at Pioneer, our name is our mission.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.